Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's go through some objective bull-bear fundamentals versus technicals. I will present you with evidence and you can make the decision. I don't feel as though anybody really can say this is this or this is that. It's better off in general. Obviously this is super bearish, no doubt, but it's better off in general that you're always looking at things objectively. That includes myself. So I'm going to go through my list of things based on trend analysis that I look for as we're continuing to push lower here and deciding, is this the beginning of a bear trend? Should I be selling? Me personally, not you, because this is an investment advice. Should I be buying the dip? What should I be doing? What should I be looking for? Can we predict the future based on technicals? So fundamentals, the evidence, in my opinion, is really not an opinion because it's evidence, but protocol, the Bitcoin protocol is moving forward, scaling debates behind us, SegWit, Lightning, companies accepting Bitcoin, etc. On that front, the dev team is not dirtling anymore. Things are happening, moving forward. There's stuff in the pipeline, Shore, Masts, Mimblewimble. Privacy is coming to Bitcoin eventually. Again, so fundamentals for me are strong. Let's move to technicals. Let's look at the charts. Just looking at this, I don't see anything that sticks out to me in particular other than ranging nonsense. I'll point out a few patterns here as we go through, but always good just look at the naked chart, look at the volume. In general, this isn't high volume selling. That's both good and bad. It's bad because when you get high volume selling, you get exhaustion of either bears or bulls very quickly. In this case, it was bears. I don't really know how to read this other than the market absorbed more than it sold. Because if you're using that logic of bull bear, this would say like the bulls were exhausted here. I just think you have to take it into context. So high volume at a local high or local low should be a reversal. You can see you want volume up in here. We've yet to reach that. So that's just volume, simple analysis. Slow bleeds are always the worst. Slow bleeds will go on and on and on for days until you see capitulation, which is another word for what you're seeing here, volume spikes. You're seeing either bears capitulate and say, all right, it's gone low enough, I'm selling now, essentially selling the bottom, or bulls saying, okay, it's gone low enough, I'm selling now. Or in this case, bulls, this is when some guy bought, it's like 300 million or something in Bitcoin. So this is understandable. I don't know how to explain it. I don't know what to call this because it kind of defies the logic. Just because it's the highest volume I think ever recorded on Bitfinex. Anyway, so that's volume. It's low. It's really, really low compared to where we were. It's really low. Here is 5,200 crosses. I'm going to over-explain some of this a little bit just so everybody gets the point of what I'm trying to say here. The general idea of a 5,200 cross on the daily is everyone's looking at it, number one. It's the gold standard for trend analysis, if you will. The 200 represents 200 days prior, and the 50 represents 50 days prior. Now, the 200 is going to be a slower moving average. It includes more data, okay? Let's just start at 2014. You can see the fast is over the slow, the 50 is over the 200, that's bullish. Okay, we get the bearish cross, bullish recross, bearish cross again, okay. These are also called stuff, so this is the death cross, the golden cross, the death cross, okay. So immediately I'm thinking to myself, are we going to get this picture again? Are we going to get basically a fake out, double fake out, Are we going to bounce here heavily and then just slowly bleed again? I don't know. This was around the time the Mt. Gox shutdown was happening. So again, in the back of my mind, our exchange is going to get taken to court or shut down on God knows what that we don't even know exists yet. Any event that is significant enough to push this bearish will be for the best. I promise you, that is my opinion, but I promise you we will see bearish exhaustion once we get some sort of regulation or whatever. Any China news, even not... It's not even that China matters at this point, but anything that can just push this and let everybody sell at once, it's always better than a slow bleed. Okay, back to the 5,200. So here I'm pretty convinced we're going to get the bearish 5,200 cross. However, if we do not get the bearish cross. If this remains bullish, that means price pulls up super far. That will be uber bullish. Now this is like a low probability, less than 25% chance, okay? Now you can say that because you're expecting one thing, you get something else. That's a very strong reversal sign. Very similar to here. You're expecting the bullish cross and you don't get it, and we drop. Now you could say that this was lagging, blah, 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 whatever. That's not the point. This is the case for any reversal pattern. Anytime you see a reversal pattern that doesn't complete, that says that continuation is highly likely. Okay, that's 5,200. Now let's look at the cloud. We can talk about a few things on the cloud as we're getting more and more bearish, okay? So we're bullish up here, duh. You don't need me to tell you that. Basically, as soon as you get higher highs, in this case, they were higher all-time highs or new all-time highs, you're expecting continuation just on a naked chart. Cloud gets you in here. This is a bullish recross above the cloud. The most bull cross you can get on the Ichimoku system, okay? You get this, you get a Kumo bounce, or Kijun bounce. This is a mean test. It says, is this trend real? If it goes up from there, it is, okay? And yeah, all this already happened, but it's important for what I'm about to say on this side of the chart. Then things start getting bearish. You start seeing lagging span go into price. TK cross happens. That says close your long. If you longed here, you're supposed to close here. Now, this is a little late for the close based on what happened that day, but using stops, you can keep yourself from losing whatever percentage that is there. Then we go below the cloud because we do get immediately an edge to edge. Relentless. No mercy. Okay, so there's another bearish momentum trade you could have taken after this, okay? Then price just goes sideways in and out of the cloud, essentially trendless. You can call this flag, whatever you want to do. All this time, the Kijun is pretty high above price. So the probability of price coming back to Kijun, very high. It does that twice. Similar to here, we get two more bearish Kijun bounces, and we get a failure of a reversal pattern. As I was saying before, any failed reversal should be just considered continuation in general. Okay, so here was a head and shoulders inverted, shoulder, head, shoulder. We also had the Kumo twist failure. We also had rejection at the pivot, yearly pivot. And to no surprise, we go lower. I wasn't as bearish as I am now up here. I was selling. I've been 1x short for a long time. I'm not short in any other capacity. So we're pushing, great. Okay, then we get a bullish recross. Everyone's asking me on Twitter, what's that about? All that is saying is similar to here, this stuff. You know, we're ranging significantly, and we ranged so hard that TK cross happened that just says close your short if you're short. So right now there is currently no evidence on the TK cross that you should be short. Again, however, this likely will cross bearish in the next couple of days, especially if we go lower. It may not cross bearish. This is something to look for in the future, as in the week ahead. As soon as we get the bearish TK cross below cloud, just like here, this is the most bearish signal you can get on the cloud. The most bearish. Again, just evidence. You can say what you want. That's the evidence, okay? And as far as pivots are concerned, 3K, not off the table at this point. Not impossible, especially if we break local lows. Let's keep going. So that's cloud. Cloud is essentially heavily bear and about to be mega bear pretty soon. So watch for that next coming week. This is alligator. All it is 3 EMAs. And again, I'm just showing you how this looks. Again, just because this is trend analysis, this is what I'm looking at. So you want, it might be hard to see, but green is, when green's above blue, that's bullish. When things are sort of mixed, that's sideways. And when blue's above green, that's bearish, okay? So you can see all this was bullish, sideways, new highs. You can see this sort of made a decision as soon as we made a new high. Went on, great, sideways, garbly mess. Decision time, sideways, garbly mess. Sort of got faked out here, and now again it's bearish again. So if I'm looking for longs, I would be waiting at the very least until we get this picture where green is above blue, okay? If I'm looking to close my short, I'd be waiting till I see this picture where it's a bunch of garbly mess. That just says it's momentumless, it's ranging, similar to here, momentumless ranging. That doesn't mean it won't go lower or higher. It doesn't mean anything. It just means it's telling you we're ranging right now. Right now, very clearly bearish. One other thing about this, like I said, as we were farther away from the Kijun here, the likelihood of bouncing up very high. Right now, if this does cross bearish, you can say, at least I'm saying to myself, momentum is basically resetting, which is essentially why these crosses that match the price location are either double bull or double bear. So everything's being reset basically. Just like here, you know, price was relatively close to the Kijun and it was go time. Price isn't super close to the Kijun, may or may not be go time. You know, it may just like go sideways and cross 3 or 4 times and fake you out. Okay, that's certainly possible. I'm not expecting that, but something to watch for. Now let's go to Pitchfork. The 33K by July idea is predicated on the evidence that we remain in this Pitchfork. You can see we're currently breaking below it. Depending on if you're using traditional Pitchfork rules, you can say at this point, at this daily close, so if we close in whatever it is, 8 hours, below the cloud, or below the Pitchfork, it's invalidated. However, the only reason I'm adding a wing on here is that we've exceeded that there. So I'm not a Pitchfork expert, I just play one on Twitter, okay? I don't know how to read this. We were very clearly heavily overbought here, while at the same time this could have just kept going. Very similar story here. Whether or not we're overbought, oversold, that's less important. But just based on the mean of the trend, we're deviating very far at this point. So if we are to continue, we need to pull up, you know, maybe 5.5 is the lowest. I don't know. You can see that might match these lows. Okay. At this point, I'm trying to predict the future. But it's not out of the cards that happens only because it exceeded it here. Now, if none of this ever existed, I'd say, all right, it's done. We've broken it, whatever. So it is what it is. I'm just presenting evidence. You can disagree or agree. I don't care. Now let's do more predictions looking into the future. Anytime we're making lower lows or higher highs, I'm always watching for divergences. Divergences tell you whether or not momentum is shifting. So I'm drawing the lines from the bodies of the candles, not the wicks, because RSI is calculated based on the close of the candle, not where it's been in that period, in this case the daily. And that's important. So if we get a lower low, not based on the wicks, but based on the body of the candle, and we get a higher RSI momentum, that is a bear div. That tells you that despite price going lower, it did so on less momentum. Again, we're looking for bearish exhaustion in this case. That would be one sign. Another helping hand of that would be volume just being next to nothing, and we're still getting a lower low. Again, that just says there's some sort of bearish divergence, that probability starts to swing back towards bouncing and or reversing. Now that doesn't mean we might get a spike of volume on the next candle that breaks all these rules, okay? That's why divergences, you should never really be traded alone. Let's look at the quarterly theory. Probably everybody knows by now. I'm marking quarters as January, April, July, October 1st, okay? General idea is we go up every other quarter. That's what these arrows indicate. We go up every other quarter, we chill out every quarter in between that. You can see we're very clearly in a non-up quarter. Read this as you will. I read this as all hope is not lost yet. The quarterly contracts on OKEX have started to roll over at this point. The quarterly contracts on CME, not quarterly, monthly. The monthly contracts on CME don't roll over till the first of the month. And that would be April 1st. So we'll see what happens. Again, just evidence. And we're staying above the 200 this whole time. Another thing to pay attention to, I didn't mention the 5200 discussion. When price starts dipping below the 200, you know you're in trouble. And you can see we were in trouble here. We pulled back up and we're below it again. You're in trouble from a bullish perspective. Bearish, if you're short, that's what you want to see. You want to see price breaking support there. Let's talk about harmonics real quick. Not my favorite. Some people use them to great effect. I generally avoid using them. The numbers to pay attention to here are these numbers, the 78886, 1272, 1618. These are the names. This is where I get that from. So crab, butterfly, bat, Gartley. Okay. You'll notice that the numbers besides these four don't necessarily match any of the harmonics. There may not be a harmonic here, but anytime I see a double top like this, I'm always going to look for some sort of harmonic. And if we're trying to predict the future, these are where the bounces might be. The odds that it hits crab are probably extremely low. And this would be redrawn anyway because it's not going to happen tomorrow. It's probably likely that there's some sort of bounce based on the bat and Gartley. Butterfly, not impossible eventually, but you'd have to redraw it at that point. Not my favorite, but some people like talking about it. Let's look at, again, we're trying to predict the future, saying where's support, what's going to happen here. Arguably, there's some sort of falling wedge thing here and or flag thing that we were basically at in either respect. So we may just continue filling this in, slow bleed ranging down-ish to 6K, possible. Another thing I forgot to mention that people are pointing out as well, if you look at Adam, Eve, double bottom, this could be an Adam. This next upcoming, if we're trying to predict the future, this could be an Eve. So sharp, pointy, gentle, soft, feminine, masculine, feminine, masculine, feminine, okay? And then your entry would be perfect at the yearly pivot, okay? So that's not going to be hard to identify. The problem with that Adam Eve thing is that this kind of invalidates that. This could be like a two-headed head and shoulders like I was talking about. If you're shoulder, head, we get another shoulder after we go back to 10K and then go higher. That's months away probably, at least a month away. Then lastly for Bitcoin, very clearly some sort of wedging action here, ranging down on less volume, on less momentum. That's what the RSI is telling you. So the bounce is going to happen. And, we could go down to 7K. This could just, fill this in. At this point, any triangle that's 3/4 full or more is good for completing. If you're Peter Brandt, he says he doesn't trust triangles that complete fully. So whatever, but that's that. So that's Bitcoin. Let's talk about two charts for ETH. That'll be done. So ETH generally is in a free fall. That you don't need me to tell you that. It's below the 200 at this point, made lower lows almost in both respects. If I'm looking for support, it's got to be this order block. So you can call it a quote unquote order block anytime you see consolidation in that zone. Okay. So we have all this consolidation. It's also the top of the previous 200-day consolidation ascending triangle. You can see this order block. We stopped here. Okay. So that would be your target on the way up. We stopped a little bit here. So there'd probably be a pit stop, but then eventually it's going to go back to 700. And then this zone, this range, and then this range. You can see how wide that is. So those are the zones on the way up for ETH USD. I don't think buying here is too risky, personally. That's where I'll be looking to buy. Just again, it's simple. It's horizontal lines, okay? And then lastly, ETH BTC. I originally drew this as a cup and handle, saw Peter Brandt's chart, that it was a head and shoulders. That made a lot more sense. So I've stolen it. And this is on my ChartView account if you want to check it out too. But this is how you think through this as it's happening. Shoulder, head, shoulder, great. Ideally, when the pattern completes upon breaking the support, you see a huge spike in volume. I don't really know what that's about. This might be a spike in volume. It's just that all this nonsense was so high. It's really hard to tell. Anytime you're seeing anything on BTC, whatever pairs, alt BTC, I feel like the volume is messy in general. So pattern breaks, immediately you're saying, I should be shorting here. I should not be looking for bounces. And my stop loss on any short, it would be above the shoulder of this pattern, okay? We typically get a throwback. I've talked about this a lot on Twitter, so you can think I'm full of crap, but this happens all the time with head and shoulders. So you should almost always expect like a retest of support. Whether or not this is diagonal or horizontal, I don't care. The point is, it was here. It looks like it's happening, okay? So now, how are we going to predict the future? Well, we take measured moves and fib extensions, and order block, like I was talking about before, and it looks like it's going to be 0405. That's years away, not years away, but miles away from where it is now. Seems kind of crazy. Seems a little too low. But based on this, it certainly broke the falling wedge that it was trying to draw to the downside. That's all I have for Bullvidence versus Bearvidence. Hopefully I didn't move my mouse too much and make everybody sick. Let me know what you think. Like, dislike, comment, share, subscribe, hit me up on Twitter, Telegram, and happy trading.